Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures. Let's start on a 5-minute chart and just kind of discuss what happened yesterday and where we are headed. It's about 6:40 in the morning Eastern time, so we got jobs report in a couple of hours. I wanted to get this out and into people's hands so they could see it before the jobs report. Remember, number one, don't game jobs. Don't place a trade ahead of 8:30 Eastern time because you think you know where the jobs reaction is going to be. You don't. Okay? May work out well, may work out very badly. Wait for the reaction, see what the range is, and trade off of that. I talked about that last night in my webinar. The recording is up on the website. The link is on my Twitter feed, and it's on the homepage at PrincetonTrader.com. We talked about jobs, we talked about the mini, we talked about some account management, trade management type stuff. So if you have time this weekend, go check that out. What we saw yesterday was a test of the purple line here, the monthly pivot for September 1969, fail, a retest, and an attempt to convert it, and then a gigantic bull trap fail. The bulls completely blew it yesterday. The bulls had the ball. They had nothing but green grass in front of them. They tripped over their shoelaces. They fumbled the ball on the way down. The Bears picked it up, and they ran it back for a touchdown. Worst case scenario. Completely the worst thing that the Bulls could have done. What the Bulls did yesterday was very, very similar to the kinds of complete ball drop, train wreck scenarios that the Bears would do back in 2013. I mean, very similar. The Bears would have a perfect setup. It would be over, and then the dip buyers would come in and just destroy them for 20, 30, 40, 50 handles. So we have gone from 72, 73 down into the 20s after failing to convert the monthly pivot. It turned into a huge bull trap. Monthly pivot was above. It acted as support for about 5-10 minutes, sucked everybody in, and then took them for a ride. So what we've seen in the overnight, let me zoom in a little bit, is a break of the weekly pivot. We had this hard move down in Asia. They took it all the way back up. So they got everybody out of the pool. Then they sucked everybody back in. So they flushed out a bunch of shorts there. Then they started to take it down below monthly pivot. Sloppy at first, then with a nice clean fail here, in coinciding with the European markets opening. And they've taken it down, lower high, lower low. So the Bears are in control as we head into jobs. If we get a positive reaction off the jobs report, I'll be watching that weekly pivot very carefully for the reaction. If we head lower off of jobs, you have to look at the Tuesday low, which is down at 1898.75 if things really get moving. If we do have a reaction to the upside, even if it's a multi-day reaction to the upside, based upon the events of yesterday, I feel very comfortable saying that that's a sellable rally. You just can't be early. Okay, you have to let it run its course, and then you need to be there. And you got to be patient, just like yesterday up on the 72.73. So that's all I've got. Don't game jobs. Don't screw up your Friday. Have a fantastic holiday weekend. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back Tuesday morning with another webcast. Trade them well, everybody.